Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." Sounds brilliant, right? But here's the truth. If you had followed this advice blindly in 2021, you might have lost half your money in crypto, meme stocks, or even real estate. So, was Buffett wrong, or did we misunderstand him? Most people think this quote is about being bold. But in reality, it's about something much deeper, something that goes against human nature and could save you from your next financial mistake. Let's break it down. Let's start with the surface meaning. Be fearful when others are greedy. This means when the market is booming, when everyone is hyped, when prices keep going up. That's exactly when you need to slow down and ask, is this still a good deal? Or am I just getting caught in the hype? Then the second half, be greedy when others are fearful. When everyone's panicking, when headlines scream crash, and when people are dumping assets at any price, that's when opportunity knocks. But here's the twist. Most people only understand the words, not the warning. They think this quote is about timing the market. It's not. It's about controlling your emotions, because fear and greed are the two forces that drive almost every bad investment decision. It's not about jumping into every dip or cashing out at every peak. It's about this. Can you stay rational when everyone else is losing their minds? That's the real meaning behind Buffett's words, and it's much harder than it sounds. Let's move from theory to real life. Because Warren Buffett didn't just say this quote to sound wise. He lived by it, especially when it was hardest to do so. Case number 1, the 2008 financial crisis. In 2008, the global economy collapsed. Lehman Brothers went bankrupt. Stock markets were in freefall. Banks were begging for survival. Headlines were shouting, "This is the end." Everyone was fearful. Buffett, he was greedy. He wrote a bold op-ed in the New York Times titled, "Buy American, I Am." While investors were running for cover, Buffett poured $5 billion into Goldman Sachs, one of the most battered financial institutions at the time. People thought he was crazy. They said he was catching a falling knife. But Buffett made billions on that deal because he wasn't betting on the short term. He saw value where others only saw fear. Case number 2, COVID crash 2020. Fast forward to March 2020. The market crashed over 30% in a matter of weeks. Fear was everywhere. People were panic selling their portfolios. Airlines, tech stocks, oil, all tanked. Once again, Buffett stayed calm. Instead of panic, he bought more Apple stock, believing it would come back stronger. And it did. By the end of 2021, Apple became Berkshire Hathaway's biggest holding, worth over $100 billion. So, what do both cases have in common? Buffett didn't buy just because prices were down. He bought because he understood the businesses, believed in their long-term value, and most importantly, he acted rationally when the world acted emotionally. That's the difference between following a quote and living its principle. Here's the problem. Most people love quoting Buffett, but they hate doing what it actually takes. When they hear, "Be greedy when others are fearful," they think it means, "Oh, the market is down? Time to buy anything on sale." That's not investing. That's gambling with a quote. Let's be clear. Buffett wasn't buying junk. He was buying quality companies with strong fundamentals that just happened to be on sale because of temporary fear. But here's what people often do instead. They buy random crypto projects because it already dropped 70%. They rush into stocks during a crash without doing research. They assume cheap equals good deal, even when the business is dying. That's not being greedy when others are fearful. That's being reckless when others are cautious. Buffett himself avoided entire sectors, like dot-com stocks in 2000 or crypto in recent years, even when everyone else was hyped. Why? Because he understood something most people ignore. Fear isn't always irrational. Sometimes fear is exactly what you should feel, especially when you don't understand what you're investing in. So next time you hear that quote, ask yourself, am I being strategic Or am I just copying a quote I don't fully understand? Here's the paradox no one talks about. We feel safest when everyone is buying, and we feel scared when everyone is selling. But that's backwards. When prices are high and the news is full of optimism, that's often when risk is hiding in plain sight. And when fear floods the market, when prices crash, that's often when opportunity quietly appears. Why? Because we're emotional creatures. We chase what feels exciting. We run from what feels painful. But the market doesn't care how we feel. Buffett's genius isn't just in picking stocks. It's in staying calm when others panic and skeptical when others are euphoric. He doesn't fight the crowd. He simply doesn't follow it. And that's what most investors struggle with. Not knowledge, but emotional discipline. So, how can you actually apply Buffett's advice? Here's the truth. You don't need billions. You just need a better mindset. When the market is booming, don't FOMO into whatever's hot. Ask, is this driven by real value or just hype? When the market crashes, don't panic sell. Ask, has the business changed or just the price? In your daily life, when your friends are chasing the next big coin or stock, take a breath. When people around you are scared and selling, start watching carefully. Being greedy when others are fearful doesn't mean being reckless. It means being prepared when opportunity comes. And most importantly, stay rational when others aren't. That's the real competitive edge. Not intelligence, not timing, just calm. So, the next time you hear, be fearful when others are greedy, and greedy when others are fearful, don't just quote it, live it. Because anyone can repeat a smart quote, but very few have the clarity to apply it when it actually matters. Now I want to hear from you. Have you ever followed the crowd and regretted it? Or did you ever take a bold move when others panicked and it paid off? Share your story in the comments. I read everyone. And if this video helped you see money a little differently, hit that like button. It costs nothing, but it tells the algorithm this was worth watching.